Imagine a strategy where each business isn't just an isolated venture, but a vital part of a living ecosystem. And what if your financial engine itself could fuel this network? Welcome to the Synchronistic Business Strategy empowered by Infinite Banking. Synchronistic business strategy is the art of running multiple, interlinked businesses that support a main enterprise or even an entire industry. Each business amplifies the others, sharing resources, expertise, and robust revenue streams. Now, let's layer in the infinite banking concept, using a properly structured whole life insurance policy. By overfunding the policy each month, you don't just secure your cash flow. You rapidly build up capital with every payment. Here's how it works. You direct funds into your policy that exceed your debt service for an initial business. Then you take a policy loan. This loan comes from your policy's own cash value, where unique interest credits apply. Each month, the overfunding of your whole life policy grows your capital at a unique rate. You cover your debt service via a policy loan, a feature exclusive to whole life policies where the borrowed funds continue to earn interest. Over time, your policy's cash value builds up so much that you can pay off the loan entirely. This sustained discipline not only preserves cash flow for your business but also amplifies your wealth-building capability. Step 1. Overfund your whole life insurance policy monthly beyond the required scheduled premium enough to cover the monthly debt service. Step 2. Use the policy's cash value to take a loan that covers your debt service payments. Step 3. The policy's cash value grows faster than the debt is repaid. Step 4. Borrow from the accumulated cash value to pay off the initial debt completely, then continue fueling the policy. Monthly overfunding increases policy cash value, which covers business debt payments. Cash value growth is accelerated by interest credited on borrowed funds. Loan repayment involves borrowing from the policy to clear the outstanding loan, creating a cycle of financial growth. Scaling the strategy involves using policy accumulation to finance new ventures. Borrow against accumulated capital to acquire an additional business. Repeat the process. New business generates income, further overfund the policy. The result is a self-sustaining cycle where every business acquisition builds more capital through the whole life policy. A self-funding ecosystem reduces reliance on external debt and accelerates capital growth. Policy cash value compounds, enabling further expansion. Flexibility allows the option to sell or maintain businesses with proper management. Legacy building accumulates substantial assets for retirement or generational wealth transfer. Cash flow management involves monitoring debt service, policy contributions, and business income carefully. Robust business management ensures each business unit is set up with proper management to continue generating income. Long-term vision plans for future financial security and a legacy. Risk assessment evaluates the risks of borrowing against policy cash value and potential market changes. Consider a coffee business network scenario. The core business is a coffee roastery, supported by ventures like retail cafes, wholesale distribution, and a training academy. The process involves overfunding the whole life policy to borrow and cover debt service, reinvesting returns in acquiring new debt service. The outcome is a thriving ecosystem where each venture reinforces the other, building robust capital over time. Evaluate your financial structure and consider if your current financing supports growth. Explore infinite banking to learn how to set up and overfund a whole life policy strategically. Build your ecosystem using acquired capital to expand into complementary business ventures. Plan for the future by focusing on long-term growth, sustainable income, and legacy building. Step 1. Primary residence value is leveraged into cash flow into a whole life policy. Step 2. Build cash value through overfunding. Mortgage paid off in 9.2 years. Step 3. Borrow equity to purchase 4-unit investment property. Step 4. Income from property accelerates mortgage payoff and generates cash flow for investment. This strategy accelerates wealth accumulation through real estate and infinite banking.